In this week's news, crypto asset prices are soaring as the U.S. rules that the Securities and Exchange Commission was wrong to deny an application for a spot cryptocurrency ETF. So, what does this even mean for the crypto market? Is a spot Bitcoin ETF on the horizon? How is a spot ETF different from all of the other existing cryptocurrency products on the market? And does any of this even matter in the bigger picture? We're talking all about it in today's video. Hey everyone, and welcome back. I am your host, and in today's video, we're talking all about the recent decision by a U.S. court that essentially said the Securities and Exchange Commission was wrong to deny an application for a spot Bitcoin ETF. Now, some people are saying that this could be the start of a new bull market. Once we get this spot Bitcoin ETF, cryptocurrency will be fully legitimized, institutions will be eager to buy in, and the price will skyrocket. Other people are saying that this doesn't make much of a difference because we already have Bitcoin trusts, Bitcoin ETFs, Bitcoin futures contracts, and they don't see what all of the big fuss is about. So in today's video, we have a very special guest. The one and only part-time economist is going to be joining us live from the Crypto Command Center to help us make sense of all of this. Hello, part-time economist, and welcome to the show. Thank you so much for joining us. Can you help us make sense of what is going on in the cryptocurrency market today? Absolutely. Thanks for having me. Glad to be back on the show with you there, newscaster Ned. I am happy to share my thoughts on the matter, but as with all of my videos that I make for my personal channel, I always like to tell people that this is just my own thoughts, so please don't take it as any kind of financial advice. With that being said, I think we need to look at what the ruling actually says versus what the common perception is. Second, we need to look at the difference between an ETF and the existing form of cryptocurrency type products. And then lastly, we'll talk a little bit about why all of this might or might not even matter in the long run. So let's start off with the basics. Over the past several years, a company called Grayscale has been offering something known as the Grayscale Bitcoin Trust, or I might call it a GBTC throughout the course of this video. But basically, to simplify this, this is a cryptocurrency type product that allows investors to gain exposure to the price action of Bitcoin in a format that they are familiar with. So think of it as a stock that invests in Bitcoin. They can purchase this in a traditional brokerage account, in an IRA, in a 401k, and they get exposure to a new asset class, but without having to worry about owning cryptocurrency or setting up a cryptocurrency wallet or trusting some kind of fraudulent exchange. So it's really a product that's designed to give people that want to operate in the traditional financial world the ability to access a new asset class. But moving forward to the court case that we're talking about, essentially what happened is Grayscale said they wanted to convert from a trust to an ETF or an exchange traded fund. And we'll definitely talk about why that is important later on in the video, but at least for now, the thing to know is that the SEC, the United States Securities and Exchange Commission, which basically regulates investing in the United States, they turned down this application. Well, fast forward to a couple days ago, an appellate court said that the SEC was wrong to reject this application. So let me get this straight. If the court is saying that the Securities and Exchange Commission was wrong, does this mean that we will see the Grayscale Trust converted into an ETF in the immediate future? Yeah, I can see why people might be thinking that a spot ETF is immediately on the horizon, but if we look at the way the court actually decided, that might not necessarily be the case. If we look at what the court said, it doesn't issue any kind of mandate telling the SEC that they have to prove these applications. It really just says that the reasons that they gave for denying the fund were inadequate. Essentially, the SEC is worried that this spot ETF is maybe going to be subject to market manipulation, and they have some concerns about that. But what the court did is they pointed out that there are already a lot of Bitcoin ETFs that exist. They just focus on futures as opposed to spot trading. But regardless of these two small differences, the court essentially said that the spot ETF and the futures ETF are so materially similar that any kind of existing safeguards that apply to one, any anti-fraud protections that apply to one should apply to the other, and therefore the SEC should take a similar approach when it's approving or denying these applications. So the key takeaway here is that we're still waiting on the SEC to determine the next steps, and we have no guarantee that an ETF is going to be approved, but we're definitely in a whole lot better position now than we were before the ruling, because at the very bare minimum, at least now the SEC has to give us some more detailed reasoning why it's denying these applications. Well, thank you for giving us that clarification that their decision doesn't necessarily mean that a spot BTC trust is on the horizon, but I do have a little bit of confusion that maybe you can clear up. What's the difference between a spot ETF and a futures ETF? And why does Grayscale even want to convert from a trust to an ETF type product? Yeah, absolutely fantastic question there, Ned. Essentially, we have two separate things because we already have Bitcoin ETFs and we already have spot products. Where Grayscale is trying to be different is it's really going to be the first to both be a spot product as well as be an ETF. So what's the difference between spot versus futures? When we look at spot trading, we're typically thinking of the underlying asset itself. So this is some kind of investment that actually owns gold or oil or corn. Whatever the case may be, they own the underlying asset. Now, when we're looking at futures, these are essentially contracts that will theoretically allow the investment fund to have the commodity delivered to them at a certain date and time, but this never really happens. What they do is they just invest in contracts that track the price of a specified asset, but they never have to actually go through the hassle of owning that asset. For a variety of reasons, many people feel that a spot ETF would better track the price of the real asset, and a lot of people are just more comfortable owning the real thing. And for that reason, a lot of people are interested in a spot ETF as opposed to something like a futures ETF. The thing is, GBTC or Grayscale's Bitcoin Trust already is a spot trust. So it already actually owns Bitcoin that backs all of its shares. The difference is that it's wanting to move from a trust to an ETF, and that's the major selling point of this decision. Because as it currently stands, GBTC isn't directly redeemable. That means if you have a share of GBTC, you can't just take it and cash it in and get the proportionate amount of Bitcoin that is backing those shares. And this can be problematic for a number of reasons, but specifically because of something known as tracking error. Because you can't directly redeem these shares, the price of Bitcoin might go up, let's just say 10%, but the price of your shares in GBTC might only go up by 5%. And indeed, if we look back over the history of GBTC, we see that it has traded at both a premium to the price of the underlying Bitcoin, as well as a discount to the price of the underlying Bitcoin. So the problem here is that we have investors that are trying to invest in an asset that mirrors the price of another asset, but it's not always doing that to a really good degree. There's a lot of tracking error, perhaps you might be able to say. So after everything that you've said, it really sounds like this irredeemability of the trust shares is the major issue here that's really causing a lot of negative experiences for some of these investors. Yeah, absolutely. This irredeemability is a major issue, and that is the key thing that this ETF application is hoping to change. The idea here is that if GBTC is converted to an ETF, then the shares can be created or destroyed to better align the price of those shares with the underlying asset value. And we don't really need to get into the mechanics of how this is done, but if you invest in something like an index fund that tracks the price of the S&P 500, for example, they may be using a very similar mechanism. Basically, if the shares are overvalued relative to the underlying asset, people can redeem those shares, get the asset. If these shares are undervalued, people will buy in, thereby bringing the price back into alignment. Again, it's something that happens behind the scenes. We don't need to worry about it. But the key takeaway here is that converting from a trust to an ETF would hopefully give the customers, the investors, a little bit more accurate representation of the price that they're actually trying to track. And again, this isn't to say that investing is going to be completely risk-free or anything like that, but what we're trying to do is have the price of the asset match the price of the asset that these investors really think they're getting into. We don't want them to be thinking they're investing in Bitcoin, they see Bitcoin go up by 10%, and then their shares only go up by 3%. I know I would be pretty upset if I was an investor and I felt like I was getting all of the fees and downside risk, but whenever my asset went up, I wasn't getting the full price increase. So overall, this really sounds like a win for investors if we could get some kind of product that more accurately tracks the market. But what does it mean for the cryptocurrency market as a whole? A lot of people seem to think that this spot ETF is going to be a huge demand driver for crypto and boost the price of the whole market. Do you think we can expect to see something like that? Yeah, great question. There's really two camps when it comes to this. The first camp thinks that a spot ETF is going to be a massive driver for price increases. And the argument goes something like this. Since the majority of cryptocurrency funds that are currently in existence are based on futures contracts, they don't actually have to own the Bitcoin that they're investing in. So there's really no demand from these funds pushing the price up. Essentially what they do is they just keep renewing these contracts that give them exposure to the price of the cryptocurrency, Bitcoin in this example, without ever having to actually go out into the marketplace and purchase said Bitcoin. Therefore, the scarcity aspect of Bitcoin that's really a hallmark of the digital asset, it doesn't really get to come into play as a price driver because scarcity isn't a factor when you can just write a contract instead of having to own the underlying asset. If this camp is correct, spot ETFs would have to actually go out and physically, I say physically in quotes because Bitcoin is a digital asset, but they would have to actually own the Bitcoin themselves, perhaps through some kind of wallet that's offered through the ETF provider. But anyway, they would have to go into the market, purchase this Bitcoin, which theoretically would increase the purchase price. Not only that, but if we saw approval for a spot ETF, a lot of people would see that as kind of regulatory approval. And the idea here, these people are hoping that as crypto becomes more legitimate, institutions start getting involved, and if we remember from the pandemic era bull run, once that price starts to go up, it's a cycle where more and more people keep hopping into it. Just as importantly, I think it's critical for us to talk about the other side of the coin, the people that say this isn't really going to make a big difference in the long run. And the key claim to fame of this Grayscale Bitcoin ETF, if it does become an ETF, is that it would essentially allow investors to own the underlying asset, the quote physical Bitcoin, while also tracking the price extremely accurately. And in theory, that sounds really good. However, we already have products that more or less do the same thing. So if you want to own physical Bitcoin, you can go out and buy physical Bitcoin. If you want to own physical Bitcoin without having to own physical Bitcoin, you can already invest in the Grayscale Trust. Now, the downside is that there is a little bit of that tracking error on the Grayscale Trust. So what do you do if you want to accurately gain exposure to the price action of Bitcoin? without having to go through the Grayscale Bitcoin Trust? Well, there's a ton of futures-based ETFs. Now, these, such as the one by ProShares, and of course I'm not recommending them, I'm just using them as an example, but they very accurately track the price of Bitcoin. Now, they do it through futures contracts instead of owning the Bitcoin, but if I'm just an investor that's trying to make some money, do I really care if my fund owns Bitcoin? As long as that price reflects the price of Bitcoin, that's all I really care about as an investor. So people that fall into this camp really don't see this as that big of a deal. From their perspective, there's already products out there in the market that serve investors' demands. If you want tight price correlation, you're going to go with the futures ETF. If you want to really own physical Bitcoin, you're just going to go out and buy the Bitcoin. So people in this camp aren't really going to see it as a major issue. And if anything, what they argue is that we're going to see more of a realignment. So new money isn't going to come from institutions into the space, but we might see a little bit of realignment where people are going, for example, from a futures Bitcoin ETF into a spot Bitcoin ETF. So kind of just moving money around within the ecosystem, but not really bringing any new money into it. Okay, wow, that is really a lot to take in, and it sounds like one of those things where both sides might make a compelling argument, and we don't really know exactly how that's going to turn out. Yeah, I absolutely agree. Anything related to the stock market or investing can be highly unpredictable, and that's why it's always important to do your own research, make your own investing decisions, and at the end of the day, even with the best research, we have to keep in mind that stock market investing is just inherently unpredictable, and we don't always know how things are going to sort themselves out. So if you could just sum everything up for our audience at home, what would be the key takeaway from this decision? Yeah, my main takeaway here would be that I personally think this court ruling is unquestionably optimistic for cryptocurrency, in the sense that at least the SEC is going to have to be more transparent with us about why it's rejecting these spot ETF applications. Now, anything beyond that is pure speculation. It's possible that this ruling could lead to a future approval of a spot ETF, a cascade of new options for investors, institutional interest, price action, but in my opinion, it's way too early to make any kind of prediction regarding any of that right now, especially considering that, at least for right now, we're seeing the price of Bitcoin really go to right where it was before this announcement was made anyway. So I think it's too early for a lot of the things, but definitely a step in the right direction. Well, as always, part-time economist, it is a pleasure to talk to you. I appreciate you sharing your time and coming on the show with us today. Yeah, absolutely. It's been my pleasure. Hey everyone, this is the part-time economist here. I wanted to do something a little bit fun, a little bit different with the video. I had a lot of fun doing it. As always, my videos are not financial advice, but I do sincerely appreciate you watching. I hope you enjoyed it, and I'll see you next time.